All right, good evening, everybody. Let's go ahead and get started. I apologize about starting just a second late, but let's just go ahead and jump into this. I'm excited to be here. Hope everybody's having a fantastic evening so far. Hopefully your trading's been going all right. Um, let's do a little bit of a mic check here. Let me know if you guys can hear my audio and see my screen in the chat box. Like I said, I hope everybody's having a fantastic evening. We had an awesome bankers close trade this morning. I ended up making about $733 on that bankers close Aussie franc trade, which was super legit. Got a couple of swing trades that are a little bit down right now, but that's okay. I'm certain we'll do fine. We've got some stuff looking good going forward. But tonight we will go over COT report and just kind of go over the details of how I use the COT report, how we determine whether to get into a trade or not. So we'll go over that tonight. Awesome. Before I get into any explanation here or go over the charts, I need to go over our disclaimer. So as always, I need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's do this. I've got to pull up my charts. Let me do this. Okay. Here we go. Okay, perfect. So before, let me actually pull up the COT report itself. I'll just leave this here. All right, so let's go to cftc.gov. That's where you find the COT report. And let me explain what the COT report is for those of you that don't know. The COT report stands for Commitment of Traders Report, right? And it tells us what banks are buying and what banks are selling, how big they're buying, how big they're selling. Super valuable information, right? Like how who would want to know that? Like everybody would love to know that. If you know anything about trading, you know how great it would be to have an insider detail as to what's happening in the broader markets, right? So that's what it is, and it's free too, which is amazing. So the government requires certain institutions report their positions at the end of the week just because they have such large positions. It could affect the entire market, and so they have to report their positions. And that it's distributed here for the open market to view. Now, I don't know exactly which institutions own what. We just know that all the institutions collectively own a certain amount of the euro, they have a certain amount of the dollar, the CAD, and so on. And these are all things that we want to be aware of. So when we come to the cftc.gov website, this is their homepage. You go to up here where it says market data. You hover down to commitment of traders. You click on that and it's going to take you here. Okay. And you're just looking at specifically the long format of the current traders and financial futures market. You click on this just because there's a lot of COT reports. Um, and it's this big piece of boring data, right? Like, how do you navigate through here? I just do a control F and then just search the currency you want to find. So if you want to find the Australian dollar, you type in AUD, and here's the AUD right here. And you just zoom into it a little bit and it shows you the dealer side, the asset manager side, leveraged fund side, which is the side that we look at. We want to find leveraged funds because these are the speculators. These are the banks that are outright taking positions, and we want to take positions in accordance with what they're doing, right? So that's where leveraged funds comes in. And yeah, so I'm looking at the long side, the short side. You can see right now there's 14,000 contracts long and 41,000, almost 42,000 contracts short. So what does that tell you? most of these banks are shorting the euro, or excuse me, they're shorting the Aussie right now. And these are things we want to pay attention to. And then I just put it all into my spreadsheet over here so that we're on the same page. Let me actually do an update real quick and we'll get this. I have a script in here that runs. And then I'm going to update this for us. So bear with me here. I'm going to go ahead and fill this out so that we're aware. I'm going to go ahead and go through this with you guys so that we can get accurate data for the week. So we come in here and like I said, there's, what did I say? 14,102 positions long and there's 41,650 positions short. And then boom, everything populates. All these other numbers are derivatives of whatever I insert in these two columns, okay? So the sum of positions is right here, the percent long, percent short, which is really what we focus on. That's right here on these two columns. And they're just all derivatives of whatever information we put on these two columns right here. So now I'm just going to search the euro and pull the euro up. And the euro has 83,419. And then I have 76,878. And then pull up the pound. The pound has 59,202 and 52,331 short. And then I searched the Kiwi, and the Kiwi has 13,684 long and 17,042 short. And then I need to pull up the CAD. The CAD has 14,506 and 28,263. Then I pull up the franc. Okay. The Swiss franc is not as traded as much, right? 1,970 contracts long and 13,288 contracts short. And then I have the JPY for the yen. I've got 29,229 and 54,986. And then I pull up the US dollar, U.S. dollar. Okay, the dollar has 14,488 and 15,808. Okay, now that we have this information in, accurate information, most and up-to-date information, we can now go in here and find out, which currency pairs or which currencies rather are most long and which ones are most short. Okay, and then we can make trading decisions based off of that information, which is really, really nice. So I'll come in here and let's look at the short side first, because there's a lot of stuff that's really shorted. So it looks like the franc is perhaps the most shorted currency pair, and it looks, or currency, and it seems to be even more short than the previous week. And it, yeah, appears so. So yeah, it looks like the franc. I'm going to pick the franc. What's the next most shorted thing? Probably the Aussie. Yeah, 74, 75% short. So what this means, guys, is that that means that 87% of all the positions outstanding held by the big banks in this country are on the franc are short positions, and only less than 13% are long positions, which it means the big banks have this incredible bias to push this market to the downside, right? And then you have, the Aussie, same thing, incredible bias to push the Aussie to the downside. Not as much as the franc, but still very biased to the downside. And then what's the next guy? I'll pick the third one, probably this one right here, the CAD, which it looks like it's basically the same from last week. Yeah, all of these haven't changed too much. Yeah, they haven't changed a ton, but yeah, still that's good. All right, and then the next one would be looking at let's see, the long side, percent long. Let's look at the long side. So the most bought currency right now, I think, is the pound. Yeah, it's probably the pound. Most currencies are incredibly shorted right now. So that's the most bought. And the next most bought currency is still the euro. So, which means we basically have a duplicate of last week. I'm actually going to just copy all the signals from last week because it's basically the same. Basically the same. And then we're looking at, again, this data is looking at November 22nd. That's the most recent information we have. November 22nd, 2022. Technically, there's a new report every Tuesday, so we should have had one yesterday because today's Wednesday, but yesterday's report will not be released and compiled until Friday. So you are a little behind. We are a little behind on this data. Technically, the government's behind, right? Because it's the government that compiles it. I don't know why it takes them up to 4 or 5 days to compile it, but that's what we'd be looking at. But yeah, so it's basically the same signals from last week, and same order. It's the same order. So I'm going to leave this as is. Yeah. So basically, buying the pound franc right now is technically the best thing to do. For the last 2 weeks in a row, buying the euro franc as well, buying pound Aussie, buying euro Aussie, buying the pound CAD, euro CAD long would be really good options to trade. Now, real quickly, guys, this is really interesting stuff. Like, a lot of people, look at this and they're like, well, um, why would you buy these or why would you sell these? Well, think about it, guys. What we're doing here, and the analogy I always use is a sports analogy. So bear with me here. I think it makes a lot of sense, the sports analogy, but you tell me if it doesn't. So basically, we're in football season right now. We're actually, this is championship week in college football. Everyone this week, best teams in the country are playing each other this weekend. So it's really exciting. I'm watching football this weekend, right? So, um, yeah, I'm so excited. I got all these games lined up for Friday and Saturday. So, but a football analogy in terms of the COT report is like this. So you're taking the most bought currency, which could be considered the best team in the country. We'll say right now, I think the consensus is that Georgia is the best team in the country right now in terms of college football. There's some others that are pretty good too. You've got Michigan, TCU, USC. I mean, there's some pretty stout teams in this country right now. But we'll say the very cream of the crop, we'll just say the very top, at least for now. I'm not trying to offend anybody. I'm just going off of the current rankings. Right now, the current consensus is that Georgia is the very best football team in the country. So if that's the case, that'd be like saying the pound is the most bought currency. So you're saying, hey, I'm taking the pound. It is the most the best currency to buy. If you're a big bank, and which currency are you most likely to buy right now, it would be the pound over anything else. Maybe the euro close second. Maybe that'd be like your Michigan team or something like that. They're both about the same. But you're taking the very best team, okay? And then the other thing you want to do on the flip side is you want to take the worst team in the country, the absolute worst team. And I don't know, that's a little harder to pick who the worst team is. And I probably won't use a specific name. I'll let you fill in the blank. But yeah, let's take a Georgia, the best team in the country, and let's have a game this weekend against the absolute worst team in the country. And that's what we're doing. We're taking the best currency and taking the worst currency, and we're pinning them together, fusing them together, and then we're taking a trade based off of those two currencies, right? We're buying the best currency, which would be the pound. That's why we're going long or buying, long or buy, same thing. And the worst team would be the franc, because that's the most shorted currency, or the most sold currency in the country right now, would be this combination right here. To buy the pound franc would be the most, at least in terms of the COT report, that would be the most sensible trade to take, would be to buy the pound franc. Let's go take a look at the charts. I actually don't know for a fact, so I'm taking a little risk here. Let's see how the pound franc has performed over the last, say, couple weeks here. So let's pull this up and let's go to like a an hourly time frame, and let's kind of see where this market's been over the last couple of weeks. So, I mean, it overall kind of looks up. Let's see though, is there anything that we can digest out of this, or or any takeaways we can get here? Yeah, I mean, this is the start of this week right here. And actually this week is just slightly down, which maybe that means it's a good time to buy. But, and then you go back a week before that, you're looking at right here. That's when the initial signal came out to buy. And yeah, sure enough, if you had bought here today, you'd be up 81 pips from the first signal to buy. I mean, that's when it was at the number 1 slot. It's actually been a signal to buy for a little bit. It was in the number 2 slot 3 weeks ago. And then it wasn't on the docket 4 weeks ago. So yeah, you could have bought this pair for the last 3 weeks, which puts you right here. Right here. That would be where the signal started to buy. And yeah, that's a great time. Like, look at this. You'd be up today 266 pips. So yeah, definitely very valuable. Definitely something to consider and look at, which I think is super awesome. Having that bank support is huge. And then there's other ones too, like, the pound francs, the top one, the other second pair would be the euro franc. So this is taking the second most bought currency and pitting it against the worst most sold currency. So buying the euro franc, we can take a look at that. I'm not exactly sure how that one's performed over the last couple of weeks, but yeah, let's see, how long has this pair been bought. It was bought here 3 or 4 weeks ago. Yeah, so it goes all the way back to November 1st. Let's see how that one would have performed since November 1st. Need a little more time on this. Let's see, November 1st puts you kind of like right here. So it's actually just slightly below where it would have been. Like, you'd be 43 pips below where it started a month ago. But in the meantime, there were several big dips. And I'm not saying it's a great idea, but yeah, like, if the signal is to buy and this market dips into here, I mean, wouldn't that make sense? Isn't that a bargain? Isn't that a discount? I would say so. I would say that's definitely a discount, a discounted price that you're buying at, which is, really, really awesome. So let's look at some of these others. Pound Aussie, that one's a buy. How long has it been a buy? It's been 2 weeks. Should be, yeah, there is 3 weeks in a row. For the last 3 weeks in a row. So since November 8th, it's been a buy, the pound Aussie. Hasn't been in first place, but it's been it's been there. Let's see. So what did I say? Since November 8th, the pound Aussie has been in the mix. It was at 6th place 3 weeks ago, 3rd place 2 weeks ago, and it's back at 3rd place again. So it's definitely in the top, 3 or 4, over the last couple of weeks, which is still a good trade. And November 8th is when this signal started to buy. So it's, started to buy right here. and this market dipped a little. Again, that could be used as a buying opportunity. And sure enough, like it went as high as 300 pips in your favor. Today, you'd be basically just up a little bit, almost break even to where you started 3 weeks ago. But it's just interesting to see, if this market sells off, if the market sells off, but it's still a signal to take, I think it might be worth, buying into some of these things. That's my opinion. Is this something that's worth trading? Especially, I think it's definitely worth it, especially if, for example, this Aussie went from 68% short to 74. So the signal's only been increasing. So they're only selling even more of the Aussie than they were the previous week. So selling the Aussie still makes a lot of sense right now. You look at the franc, they're selling even more francs than they were the week before. I think these are things to pay attention to. The pound, they're not buying as much of the pound as they were before. The euro, they are definitely buying more euros than they were the week before because it was at 50% a week ago, and now it's at 52%. So when you look at that, maybe the euro Aussie would be the most sensible. Like maybe buying the euro Aussie would be the best option. Let's take a look at that. How has that performed? I don't know. I'm just playing around with this. Well, now it's at a low. Almost makes you wonder if this is a great buy right now, if that the banks are increasing their position on the buy for the euro, and they're also increasing their position on the short side of the Aussie. Well, that would make sense. Like if you got the euro going up and the Aussie going down, then this market should go up to make sense with what the banks are doing. I don't know that for sure, but it definitely makes a lot of sense in my mind. Especially now, like maybe this is a really good trade to take. I don't know. This could be a real banger trade. Worth a shot. All right. So anyway, that's it in a nutshell. That's kind of how it works. Most of these have had a lot of success recently, as you can see, as through the examples we went through. Some of them would be down too, but most of them have had a lot of success recently. And, based off of this, it's kind of nice to see, hey, where are the banks generally going? It's kind of nice to know too, like if you get caught in a bad trade, will you get help from the banks to help bail you out on that trade? And often you will, because they'll come back and buy more of that currency pair. So, all right, guys. So I think that's about all I need to cover, all I was planning on covering today on this webinar, specifically talking about, those different pairs. I've actually got some stuff lined up like that right now. I've got an Aussie CAD long. Probably shouldn't be buying the Aussies considering what we know about it. However, I am shorting the CAD, and that's a good one to be shorting right now subsequently. So it's like shorting it's like selling two really weak currency pairs or currencies. Selling the Aussie yen right now, that one makes sense. I'm selling the Aussie Kiwi. That one also makes sense with where we've been going with things. So, all right, guys. Well, I'm probably going to wrap up with that. Appreciate your attendance. Thanks for coming, and we'll catch you in the next video.